introduction and session with Dr. Raghuram Rajan. Those who wish to ask questions, please raise your hands and one from the attendant.
Why not have for the exploratory, thank you, exploratory experimental laboratory centers, close down the pubs, bars, lounges and create that. So since you're having different SIN, PIN, PAN card numbers, voters card numbers, why not have one voter card number? So you are dealing, so you are giving interest and a period. So why not have attractive interest rates for different deposits? So and the corruption is, one. Thank you.
You will need to keep it short, yes, please. Not make long comments because we have only 15 minutes.
And actually, it's great because the men don't get the money and the wives have the ATM card. And sometimes the men have the passbook so they can see how much their wives are spending. But it's very effective and they like it. The question, despite all of this, I'm not. Yeah. Anyway, despite all of this, yeah, it's been a challenge just getting some of the principles of financial literacy to the staff, right? About how much they spend. So, even put the mechanisms in place and some of these technologies work, how do you actually kind of put some of these principles into place so that they're actually saving and consuming more wisely?
Well, I know you said that I made it sound so simple. It's not. And we need a system to replace a system. And I did want to, I hope I didn't say that financial inclusion or direct benefits transfer is a cure-all. I think it's an important part of the solution because it has the possibility of liberating the world. But of course, there's a system we have to put in place to help those who get these transfers, including advice, financial management, understanding different products, and so on. Which is why it's a community effort. It's an economy-wide effort that it's not going to happen in a day. It's something we all have to work on. There are many parts, many moving parts, and I hope I conveyed the complexity by saying 5 P's. At least 5 things we got to get right. In marketing, you need only 4 P's, right? Except somebody has added a 5th P, I think, just to add that version. Anyway, it is going to be difficult, but I wanted to convey the importance of doing something like this, that it can strengthen our democracy, which seems like far-fetched from direct benefits transfer, but I think it is linked, at least in theory, if not in practice.
So may I ask? Thank you. So, thank you very much for the excellent speech we had. Good evening, sir. And thank you very much for the excellent speech which we had. So my focus, you didn't touch on the black money for which the government, Prime Minister Narendra Modi is focusing upon. So what I would like, there's a move of Reserve Bank of India whereby notes which do not have the year printed are being taken back and issued. My suggestion, if the RBI could consider, we can have new series of notes with Rabindranath Tagore, Homi Bhabha, and whereby the scientific fervor is introduced under the new leadership of Prime Minister.
So, not quite sure if what you meant is demonetize the old notes and introduce new notes instead. And in the past, demonetization has been thought of as a way of getting black money out of circulation, because people then have to come and say, how do I have this 10 crores in cash sitting in my safe? And then explain where they got the money from. It's often cited as a solution. My sense is it's clever, find ways of
Hello. Check. Hello.
more carefully that
करते हैं. हेलो चिक चिक
And now, if we have a reasonable tax rate, for example, the maximum tax rate on high income is 30%. In the US, it's already 39 plus state taxes. So we're actually lower than many industrial countries. Given that, there's no reason why everybody who should pay taxes is not paying taxes. And so I would focus more on using tracking data and better tax administration to get at where money is not being declared. And I think it's very hard in this modern economy to hide money that easily. I wondered about why we can't get anybody other than the father of the nation on these notes. Because there are so many great Indians. Of course, he stands head and shoulder above everyone. But there are so many other great Indians that we could get on the notes. I sense that almost anybody else would be controversial. Except perhaps for, you mentioned some people in science and literature. But even within those areas, there's a lot of controversy on who's the most, we just had an example of a sportsman being named to the Bharat Ratna. And within sports itself, despite this person being somewhat iconic in India, we had a lot of debate about who was really the best. So, unfortunately, it seems that we can't agree on anybody else.
Inward focus right now, which our country would definitely need. We consider ourselves as a superpower.
That mic actually doesn't work. Use it
Yes, definitely. While we consider ourselves as a superpower, we don't see a single bank, Indian bank, figuring top 50 banks. Is there something which RBI and the government is trying to do on that? Specifically, if we compare ourselves with China, we see quite a few Chinese banks in top 50. And also the strategy, like when Chinese companies going abroad, say Africa, the Chinese banks are going to go. But we don't see that with the Indian banks.
Our largest bank, State Bank of India, I don't remember the last number, but 40% of banking system assets. Okay, we have 6% of banking system assets. If you look at the United States, the largest bank would be a much smaller fraction of banking system assets than SBI. Why am I making that point? Because it seems to me the key issue is not so much the size of the banks SBI, Punjab National Bank, they are very big relative to the the problem is our GDP ratio is relatively low in our economy. It's 1/3 of China's size and 1/7 of the US. In other words, your concern about having large banks is to improve the credit to GDP ratio from the current levels. China's credit to GDP ratio is 160%. We are, if you say credit is about 70 to 80,000 crores, we are about 80 lakh crores. It's about 75% of 60 to 75% of GDP. So, in other words, China does 2.5 times the credit we do relative to its GDP. Its banking sector is so much bigger relative to GDP. And of course, the Chinese economy is 3.5 to 4 times our economy size. So, grow credit to GDP, grow the economy, we'll have world-sized banks.
Governor, you very articulately and accurately described this circle of dependence which prevents the consumer from getting access. And I agree with the theory, and I think consumers will want the access. The problem with circles of dependence is they become cozy, And the question is, nobody who has the power to make change wants to break the circle. Now, when you go and talk to government, to people who have the power to break this circle, are you finding any willing accomplices in breaking this, or are you going to be the Lone Ranger having to fight this all out by yourself?
No, I did not want to indicate that there weren't people, well-meaning politicians, well-meaning leaders out there who want to make a change in the system. And my sense, I said the government is going to announce this plan, is that the government, certainly, probably not for the theory I'm putting on the table, but for a variety of public services, and wants to improve financial inclusion. So for whatever reason, I think the broader objective of creating choice for the poor is certainly something that people are talking about, are thinking about. What I wanted to put down was a particular theory as to why I think this is so important today. Because when people think about direct benefits transfers, they don't sort of look at all the things it could change, all the dimensions in which it could be such a powerful tool in changing the dynamics at the lower level. And of course, as Ms. Piramal said, there's a lot more that needs to be done than just this.
Positions now, not we as a country, but the global economy as a whole. What are some of the risks that we could still be facing, and how is India positioned now in this no easy money regime now?
Right. So first, let me sort of correct the impression that seemed to go around on the web that I was saying a crisis is imminent. That wasn't my intention. This was a long interview. If you read the interview, it was basically saying that I worry that monetary policy in a number of countries is doing too much. That it's, instead of the political system taking action, reforming the economy, etc., and industrial countries do need reforms, because there was political paralysis, they were relying on the monetary authorities to provide whatever boost there should be to the economy. And I thought this was dangerous because the monetary authorities across the world are boosting asset prices rather than real activity. And if asset prices leak out in a sharp way, that would create immense volatility, and potentially some people could be caught out by that. So that was my concern, rather than here's this Cassandra who's predicting crisis yet again. No, that wasn't my intent. I was saying we central bankers, certainly my colleagues in industrial countries, are trying too hard. And I would prefer monetary policy to do less, and other parts of the economy, including the political system, to do more. That was the thrust of what I was trying to say. But also saying that if we try too hard, we raise the probability of crisis. It was a directional prediction that we are raising the probability of crisis by inflating asset prices more, rather than saying anything about imminent crisis. That said, I have no doubt that when interest rates start picking up in industrial countries, we will be tested. We will be tested by capital outflows, and my hope is that we've done enough in terms of strengthening the macroeconomic fundamentals of the country, and in trying to move capital flows towards the safer end, as well as in building up reserves, that volatility will not affect us anywhere near the extent it affected us last year. I hope we've buffered the economy against that. But I would be the last person to say we shouldn't worry about volatility when that happens, because across the world, I think every economy will be tested for a little while when that happens, simply because we've sort of blown this up for a long, long time. I was having a discussion with Ruchir Sharma this afternoon, and he pointed out that the increase in asset prices during this recovery has been the fastest that he has seen on record. So that suggests that we've blown things up. The increase in asset prices has not been accompanied by an increase in real activity. It's been one of the slowest improvements in real activity, but one of the fastest improvements in asset prices. That suggests a disconnect we should be worried about when the time comes for interest rates to go up.
So, Doctor, good evening. It was a pleasure to hear you. Very quickly, the new government, we heard the finance minister highlight that the prices for things can come down only if production, industrial output goes up. And in today's environment where regulations are getting very transparent and very very good, I would say, the timelines for projects are getting very difficult and changing drastically what it was 10 years back. I feel the RBI should look at project vis-a-vis timelines to actualizing the end point. And one more indirect context I was saying is the US, when we go and buy things in the shops, and when we buy things in Europe and when we buy things in India, I feel in India things are very expensive. Not only the cost of the products, but the replacement cost or the wastages, etc., we end up really very expensive. So I just want to highlight that industrial output with regard to the current regulation environment, we would like RBI to look at timelines in projects.
Well, recently we allowed banks to structure loans in a more flexible way, what we call the 525 structure, where much of the construction would get done in the first 5 years, and then the whole loan could be restructured and sold if necessary to people outside the banking system. So there's some flexibility introduced through that kind of structure, which is meant partly to get at this idea that things have become a little more uncertain in the system. We also allow restructuring when you can get somebody in for about 25% of the loan. We just brought it down from 50 to 25. The idea is when you want to restructure something, let somebody outside independently say it's worth doing.
Right.
And when they come in, you can allow restructuring. So we've been working on allowing greater flexibility given the more uncertain environment. But let me stress that the best cushion to uncertainty is more equity. Yeah. We have capitalized projects with very thin equity, partly based on the successes of 2005, 6, 7.
Right.
And we need projects with much more equity based on what has happened since. And so we need to bring in more equity into the system. Some of it will come from promoters, but some of it has to come from the larger public, because just relying on foreigners to bring in that risk capital may not be enough for the growth we need.
So just one thing, Exim Bank had also a circular on...
I'm sorry, we have to give...
Thank you.
Doctor, I really admire your objective, but I disagree with the way you're looking at reducing the poverty asset. Direct cash transfers for a country where we have 300 million people who are below the poverty line, I wonder what's that going to do to our deficit. Plus, how is it going to incentivize people to work hard? It sounds a little like Robin Hood economics to me. You know, you take from the rich and you give it to the poor. Why don't we look at creating, if we are very keen on reducing poverty, why don't we look at more job creation? And for doing that, why don't we reduce the interest rates for the industry? That would just be a good trickle-down effect for the poor people as such.
See,
more for the construction industry, because I'm from there. So,
I was waiting for the plug. Look, I have absolute sympathy for your point that creating good jobs are the best way to liberate people from poverty. And we need to create far more good jobs. We need to create frameworks where those jobs are enabled, allow new firms to enter and grow. We need to do all that. But that's not in any way these two solutions are not mutually exclusive. When I say direct benefits transfer, let me ask you the question, how much money do you think the government is spending today on all these services per person already? right? So some guys, Devesh Kapoor and a co-author did this study. And unfortunately, you asked me the question, I didn't have time to go back and look at the number, but my recollection is it was in the order of tens of thousands of rupees that were already being spent on maintaining all these facilities across the country. So the point about direct benefits transfer is not to add a whole new set of benefits that would be transferred. It is about transferring existing benefits far more effectively than they're being done today. Eliminate the middleman in some of these direct transfers, in the transfer of pensions, in the transfer of scholarships. Eliminate the middleman, make sure that it reaches the final beneficiary quickly to the full amount. That's one. But also, you could think about folding in some of these, supposing I give you subsidized kerosene. Rather than subsidizing the kerosene, which leads to leakage and overconsumption, can I give you the equivalent in terms of a direct benefit transfer, which may not therefore distort the price and create also other problems in the economy? So the whole idea behind direct benefits transfer is not necessarily to increase the quantum, but to transfer what is already out there in a much more efficient way. And my point is that rather than providing the service, if you give the means to the poor to buy the service, you're giving them, you're empowering them, you're giving them status, you're giving them respect. And that will make a huge difference in how they get those services. On the issue of interest rates, I think I've spoken enough, so I won't speak more. One second, there's a question here.
Yeah. I entirely agree with you that by giving direct transfers, there could be a lot of saving for the government. But would you recommend the same amount of direct transfers for everybody, but should it, or which is what happens now? We spend the same amount of money on everybody, including perhaps the rich. Would we give the same cash transfer to everybody, or would there be some sort of graded scheme? And what sort of transition would we have as people become rich to withdraw the cash benefit?
Those are very good questions, and I actually have a footnote in the written version of the speech on the issue of how do you get out of it. I mean, clearly, you don't want to create a welfare class which lives only off that and doesn't improve. And I've talked a little bit about in my talk also. But there are things like the earned income tax credit, which the US gives, which allows you to get out of a situation where you're getting benefits without losing all the benefits every time you earn, but sort of makes it sort of taper off in a way that gives you the incentives to go out and earn. So we have to think about something like that, but that's a problem of success. If in fact the people we are directing transfers to start earning in a big way, that would be a good thing. But the first point you made, we need to target this very effectively. So yes, makes no sense for the rich to get these transfers. My friend Abhijit Banerjee said what we should do is make everybody stand in line every month to get the direct, even though it goes directly to their account, let them go stand in line and put their thumbprint put their biometric somewhere so that there's a cost of getting the transfer and the rich will self-select out. They have to be there in person. They can't send their peon or something to do it for them. That's an interesting idea, but we have to find ways of trying to find the target beneficiary in a proper way. And this is where I believe the information technology we're getting. Supposing somebody has a 50,000 rupee account somewhere, maybe a few of those pieces of information would tell you that perhaps this person has enough, and therefore you would taper off. They would have to be completely outside the system to continue receiving these transfers. And then there are lots of ways in the village of identifying people who are relatively wealthy. This whole survey, none of this is exact, but it would work to diminish the people who are sort of misusing the system.
Sir, financial safety over the long term has two essential prerequisites. One is financial inclusion, which you have addressed very well. The second one is stopping the erosion which happens because of inflation. Now in this connection, you had in a couple of back in the monetary policy spoken of refurbishing the CPI inflation index bonds. Now after that, one thing which would be nice to hear from you is that whether this type of saving, especially which is going for poor people, for financial inclusion, whether it could have some guarantee of inflation protection. It's very cumbersome to issue bonds to all of them, but whether the deposits could be having some sort of CPI inflation index, and also whether CPI inflation index can be essentially targeted as a long-term pension type of instruments for the benefit of all.
Yeah, look, I mean, I can understand where you're coming from. Typically, benefits, say food benefits, would be indexed because it would be what price you can buy food at in the market. So there would be an indexation there so that you can buy the necessary quantity of food. The problem with looking for too much for the government to insure you at is that it's not clear the government is the best risk manager in the economy. And often whenever the government offers guarantees, it underprices those guarantees. I mean, it's worth looking at, but the danger, I will tell you, is if the government gives inflation index pensions, maybe pensions linked to the standard of life at a certain future point, you can take it from me that the government will underprovide for those pensions, and some future government will have to deal with the problem of having to pay them out. So it's not clear to me that you want to impose the risk on future generations by this kind of government guarantee. Better that the private sector or the individual themselves figure out ways to insure themselves. You're right that they're not that financially sophisticated initially, but that's where we have to do work to inform them. But government as the answer to everything, my sense is eventually could become a problem. Thank you very much.
After today's interaction, we know there are more than a few good men in our government systems. Thank you, sir. We applaud your vision and courage. On behalf of MIDC, Dr. Bhushan Gagarani will give a memento to Dr. Raghuram Rajan. And on behalf of the Lalit Doshi Memorial Foundation, I request Mrs. Pratima Doshi to present a citation to Dr. Raghuram Rajan. We have had a full house, and I now request Dr. Gagarani to deliver the vote of thanks.
On behalf of Lalit Doshi Memorial Foundation and Maharashtra Industrial Development Corporation, I would like to express my gratitude to Dr. Raghuram Rajan for not only articulating his thoughts, but the putting up the financial inclusion issue and contextualizing it in the entire gambit of governance. Thank you very much, sir. I would like to thank Dr. Saharia, the former Chief Secretary, Government of Maharashtra, for presiding over this function, and Dr. Swadhin Kshatriya for gracing this occasion. Thank you very much, sirs. Above all, I am grateful to all of you to making this event meaningfully successful on continuing basis. Thank you very much.
As we conclude today's program, on behalf of the trustees of the foundation, once again, we thank all of you for joining.